Well, guys, we were looking for it over the last 10 days and it's finally occurred. The rare Zweig breadth thrust has happened, but what does it mean for us as traders and investors moving forward? In today's video, we take a look at the data over the next months and even year to see how big an event this really is and whether Wall Street was early to this once again. Could it be that we're actually in a massive turning point here where the bulls will be in control of the market once again like they were in 2024? Well, with massive earnings coming out from Google as we kind of suspected and a huge change in the bonds market, there is a lot to discuss. Let's go through it all right now together as we cover stocks, commodities, and cryptos with everything that you need to know right now. This one's not to be missed. Let's go through an absolute crazy stat. Well, welcome back everyone to The Daily Show. My name's Tom and what an episode we have today. Semiconductors up and a breadth thrust that you just do not see very often. But what does it mean for us? Well, in today's video, let's get into it straight away. We'll start off with what is a Zweig breadth thrust, the data surrounding it, and of course then go through all of the normal stuff, including the options moves. But let's start off here with the big one, which is the Zweig breadth thrust and how it triggers. If you want to read this, you can check it out in the links in the description over on our X account. So basically, this was a breadth thrust developed by Marty Zweig, and it's a very rare signal that triggers when the percentage of New York Stock Exchange advancing stocks over the 10-day moving average jumps from less than 40 to over 61.5% in 10 trading days or less. And as a translation, this basically is a massive surge in buying across the market, not just in tech or mega caps or anything in particular. Now, this is a huge deal because it often starts significant bull runs. So let's actually take a look at the data here when we're talking about these Zweig breadth thrusts and what it tends to mean for the next coming months. Now, we already thought for quite a while we're in stabilization mode, but what we didn't really think was we were going to get one of these. We were looking for it, but we didn't know if we were going to get it considering the news that's been surrounding. Well, anyway, we do now have one. And you can see here 1 week, 2 week, 3 week, 1 month later, the stats are phenomenal. And in fact, a lot of the time, these Zweig breadth thrusts, although they can come with kind of, bottoming factors, which we'll talk about in a moment, they generally lead into extremely good 12-month periods. Now, what does the market know that we don't? Could it be that Wall Street, with those massive dark pools that we saw earlier this week, are privy or maybe even have information that they believe is going to turn these markets? Could it be that Trump going back a little bit on China tariffs is the wall of worry starting to come off and people, of course, speculating on it? Generally, markets love to speculate on that stuff, so of course, it seems kind of more likely. Now, according to Jason Gottfried, we actually have what he calls a super Zweig. Yes, we've gone past the level of just Zweig and we're actually going now to the next one, which is basically where we hit an extreme on both sides, and that's an extreme sell and then extreme buy. And whenever we've had these ones, we've always gone in, and that is 100% of the time, at least in recorded history, into a massive next 12-month gain. So that is a plus 20% overall. Now, I've got to be real here, guys. This is one of the most bullish reads that you can get in markets. We've used this several times on the channel since we've started. And of course, we've always looked at this as being a huge turning point. And could it be once again? Well, of course, the statistics would be on your side. And that would also come along with what we've already been talking about, which is that we had that really good breadth the other day, that 96% plus breadth that, of course, looked really, really, really good and had those fantastic stats with it. So is everything fantastic? Well, we've been talking a little bit about the 1990s and we've kind of speculated that maybe we're in this period of time here, which is effectively where we are right now, is around this point here with the Zweig breadth thrust. So could we be looking still at a market that will come down, have one last sell and then rally back up? Well, if that does happen and the markets do come back down, now that we've had a Zweig breadth thrust, it certainly brings into focus the statistics more towards the bullish side. But I think it also needs to be noted that whenever you get these massive thrusts, we tend not to make new lows, okay? So that's really important. In fact, I think only over the last maybe 10 reads or something, we only made one new low, and that might have been back in 2015 read, that kind of period time there. So this is a very bullish signal. And of course, the markets are certainly feeling it. But even though this is the most overlaid right now, could it actually have just stopped this entire sell-off? Hey, that's possible, but we've got to keep everything in line. And as you'll see later on today's video, we'll still be talking about specifically some of the levels that we thought we'd hit. And one of those is, of course, that 5,600 zone. We're getting closer to that now thanks to this breadth thrust. And that means that we're getting closer to where we think the real bears may sit if they wish to sell it off. So why did all of this happen? Well, of course, earlier this week, we saw Trump potentially rolling back on the idea of keeping these tariffs so high. We saw Besant, of course, talking about, them being unsustainable. And on top of all of this, we saw dark pool trades. Now, a few people asked me in the comments, what is a dark pool trade, man? You always talk about it. What the hell are you talking about? So basically, a dark pool trade is a transaction that goes on between two parties. So you've got to think about it as usually we will buy and sell in the market. Well, this is where maybe a company might, like a big hedge fund manager, might call up another hedge fund manager and say, I want to buy a certain amount of stock. And the other one will say, okay, I'll sell it to you. And they do it basically off the normal grid. So they don't do it in the normal transactions that you see. And then they report it usually at the end of the day or sometime during it. Now, why this is important to note is it's two large transactions, or it's one large transaction between two parties that you don't usually see in the markets. So of course, that means that somebody potentially more sophisticated than us is making this transaction happen. On top of that, then sometimes you get sweeps, which are these diamonds. What is a sweep? Basically a really fast transaction done very quickly. And when you see these sweeps, then you've got to think about it as someone was in a hurry to get it done. So someone was not only in a hurry to make a big transaction this week down near the lows, but then we also had somebody stacking on top of that a huge trade right afterward. And this was, of course, in SCHG, which is a large growth ETF, but we saw it in so many. We saw it in the 1,000 growth here. We saw it in the S&P as well. And we saw it in, of course, IVV, which is the S&P ETF fund. So it seemed like pretty much some people in Wall Street, they knew that they want to buy this dip and they've been purchasing it up. Now the question will be what happens up here, because as you can see, there were a lot of transactions here that ended up being a short. We saw some monstrous buys here, obviously huge trades here as well. So many big trades going on recently. By the way, if you're new here, make sure to subscribe and smash that alert button. We do share these on the daily, these types of bits of information. Very helpful for us as traders and investors. And you can see here the 5,600, 5,660 zone. That's going to be the key area that we'll be looking at. Now let's have a look at a couple of other analogs here when it comes to past history. Of course, now we have this super uber bullish kind of read that is traditionally exceptionally good. But on top of that, we have to look at some of the other times in history. You've got the 50s period here. You've got the 40s period here, thanks to Nautilus. And of course, you can see here the classic, which is, of course, the 1930s period, which is a dead cat bounce, which we still have to watch out for. And then, of course, complete calamity. Now, I guess the thing is with this one is it's a weird crash. Yeah, it's one that's caused by tariffs, caused by geopolitical risk, caused by all these other concerns. So it technically can be taken away. And then we could go down the line of deregulation and the line of course, tax cuts. Could it be that the market is thinking that right now and they're saying, you know what, I think these things are coming? Well, that certainly could be on the horizon. And as we kind of already thought here, as you can see from FinChat, that we had a very good earnings coming out of one of the big mag stocks. Okay, Tesla, yeah, we expected that to be what it was going to be. But Alphabet, Google, I had a suspicion there was going to be some good search ads. And there was some good search ads. Search was up 10, YouTube ads was up 10, Google Cloud was up plus 28, subscription was up plus 19. It was a exceptionally good earnings result, and basically the market, of course, rewarded it by moving it forward like 5, 6, 7% after hours. Now, we've also seen smart money starting to purchase recently, in which we've had in the charts. So, of course, here you can see that we've already had a little bit of a pickup there. Again, comes with the dark pools, comes with everything else. Maybe we're going more bullish now, but still some concerns on the horizon. And one of those concerns, of course, was everybody supposedly leaving the US and going into other assets. Now, we saw that in one of our favorites. For 2.5 years, we've been super bullish on gold. And about 2-3 days ago, we kind of went, oh, you know, I think it's going to find some problems. And so far, of course, it has done so. Now, why is this? Well, it's a movement of too much rate of change too quickly, obviously getting carried away from itself, and also just being out of proportion or out of whack with some of the other metals, specifically silver. Now, remember, silver is becoming one of our more favored metals now. It's nowhere near as good as gold. I mean, let's be real. Gold is the standard. Gold's the best currency. Gold, 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 gold. I do love it. But again, it generally will start to stagnate after such a move for a little period of time. Now, when you look at gold to silver ratio, you can see that historically when this has happened, silver's been undervalued. And it has had some breakouts over this week. So if it closes nice, strong week, that would be good. Now, again, dark pools helped us to kind of figure this out. Dark pools showed us that only a few sessions ago, someone placed a massive dark pool trade. And yeah, I mean, it probably was a sell. And of course, they're probably pretty happy with themselves. On top of that, we also looked at it this week where we said, okay, well, when we see these gold runs come to an end, at least they come to a, just kind of a sideways zone or chill zone, do we see Bitcoin then pick up? Well, as it turns out, the last 3 times we have seen that. And since then, of course, we saw breakouts in Bitcoin. Now, could Bitcoin be a beneficiary of a swag breadth thrust? Theoretically, yes. If we continue to see risk on, then Bitcoin would obviously also probably benefit from the risk on side. Going to benefit from the geopolitical risk stuff that obviously is now forcing people to look for those alternative assets. But at the same time, if we get risk on, hey, it could also do quite well. Now, I think it's important to note that even though we just got one of the best bull reads you've ever seen, on top of that, we still need to consider that we could be going into a recession in the future. We did break some structure here, and it is not unusual, I remind everyone here, to make new all-time highs and even be bullish for 9 to 12 months and still have broken structure towards the downside. Markets can be tricky like this. So we need to remember that when you hit a technical bear market, that generally speaking, you will see big rallies. Sometimes you see soft landings. 2022 was the most recent one. And sometimes when they're really fast, like 1987, this is the 5th fastest sell right now here in 2025 ever recorded, they can come back incredibly strong. In fact, we've seen plenty of stats like that we've shared on the channel in recent times. But let's have a look at this breadth across the board. It was a day where defensives didn't do very well, and it was all about risk on. Semiconductors went ballistic, up 5% over the session. That's a really good sign. Obviously, that now takes semiconductors to the best performing stock market sector. It's been a while since we can say that. Over the last 5 days, regional banks, number 2, which is again showing you that deregulation kind of story, and even home builders, something that's been absolutely getting destroyed over the last kind of 6 months, coming through here with a very nice gain. So again, it could be that deregulation is the storyline here that Wall Street is showing us underneath the hood. And yeah, it may not be mentioned right now, but it does seem to be kind of playing out here. Now, did we see the Federal Reserve come in? Well, it looks like a little uptick near the end of the week here in overall stimmy. So basically, that's a little bit of liquidity being provided to the markets. We'll continue to update it. We'll have to watch it all year. So we'll be looking at what the Fed's doing as well. But it was really just about the S&P 500 breaking through, taking out that shooting star, taking out that rejection candle. There's going to be a bit of stop loss behind here. So that opens up the idea of a squeeze once again. Yes, we haven't said that for a while. A squeeze to the upside it's usually been waterfall or cascade or something terrible to the downside. But this actually does open up that 5,600, 5,660. I like that area. That's where I think the bears possibly will be sitting. And if they are going to be sitting there, then of course, that's where you'll need to be a little bit worried about this current initial thrust. Could it be that we go like this and, we come down and we cut the bottom and then maybe do something like that? Something we've speculated for a while. That seems more likely now that we've got that kind of last 24 hours of run. I mean, it is, look, if you're a bull in this community, you cannot hate what you just saw. I mean, that was a very, very good thrust day, and we knew it could happen, but for it to happen, it's just very rare. I mean, when it's happened, the statistics don't lie. I mean, they are what they are. Now, of course, could Trump put a spanner in the work? It's possible. So we have to consider, why is all of this happening? Is it really just a wall of worry? Is it really structuring up? We already knew that the market was likely to sit in this big 1,000-point range for the next 2 months, as in it was likely to have stabilized and probably hit the lows, 4,700 being our worst case scenario. But this is, this is really changing the game here a little bit, especially for the bulls. Now let's have a look at the options market coming into Friday. So you can see here people were getting a little excited on Wall Street and they were buying calls. Basically, we went positive gamma. And again, we have not been able to say positive gamma for a long, long time. So yeah, we're back in positive gamma. We've got calls everywhere. And obviously people are trying to push that thing. And you can see that there's a lot of these 5600s and 5550 kind of calls that are arriving in on the 28th. So that's next week. And for the Friday expiration, the main call wall, that is the main area, seems to be around 5,500, which I think is about where we are right now at the time of this recording. So there's still puts everywhere. I mean, these options markets, look at the stuff. There's stuff everywhere. But when you go into the 0 DTEs, all of a sudden we've entered into positive gamma. And I think people will try to jump on board this way, breadth thrust. They may only have a little bit left till we hit that big resistance. And really the question is, how do we deal with 5,600, 5,670? Do we find sellers there or not? Now, stocks like Tesla also put pressure on their top end. We got back to 260. We know that's a call wall. Break 260, go 280, break 280. 295 is the kind of key there. And NVIDIA had a good session, breaking through 105 into 106. Again, where is it? It's right at that kind of major expiration for this week. And again, looking towards the positive gamma side. Next week, we'll be looking at the 10th. So obviously, that will be important as well. And you can just kind of see here when you're looking at these markets that there is a pretty strong correlation with these $5 increments, particularly with NVIDIA. So of course, we'll continue to watch that. Now let's jump on over and have a look at the bonds market. So 30-year yields, they are not at 5% anymore. They've obviously dropped off a little bit. That's again a sign that you'll have to continue to look at. If the market does go back above 5 or get close to that, we're going to need to see either the plunge protection team, so that's the Fed, or we'll need to see the government rolling back on stuff. And I think what the stock market's doing here is it's calling everyone's bluff and saying, we know what you're looking for. We know what you're looking for. And if the market's going up here, we know that you're still supporting it. So it's like those pillars of, okay, well, you'll take off the tariffs, or say you will anyway. And then the Fed will, of course, bring the plunge protection team out if necessary, if these yields get too high. So do not lose, any side of looking at the 30-year, the 20-year, the 10-year. They're all going to be important. Now, when we take a look at the options inside of the bond side and the junk, we can see here credit spreads are back down. That is a really good sign that a bottoming's placed. We already started to see this. And of course, we talked about it. And yeah, it just continues to drop. That is a very good sign, again, for the bulls that a bottom is likely placed. And therefore, we now are just in structure looking for possibly the best buy opportunities, at least in the short term. And that's what at least you're looking at. Now, that doesn't break down the idea that there could be a recession on the future. We did kill a lot of structure overall on the bigger weekly kind of timeframes, but it can take a long time. So just remember, it's always important to remain generally optimistic whenever you can. And then, of course, have a healthy level of pessimism during the right times. If you want to find out more about this, I have an advanced course. I talk about it all. I break down how this is a repeatable thing, how it always happens over a certain period of time, and of course, how this stuff actually occurs. Because it doesn't matter who's in power, it doesn't matter what's going on. It is actually a driven by societal kind of fall that tends to happen. And these are the big ones. These are the ones like the 2008 kind of things. Let's now move over to the treasuries here. And you can see again, they're bouncing or holding the area because we know that there's that US 30, 20-year kind of hold period where we do not want to get past those yields. You can see the dollar is continuing to hold around its current support level. We'll keep watching that for trades. Gold obviously rejected. Nothing much to really mention on gold, I don't think. When you take a look at the gold chart, it doesn't really interest me from a buy level just yet. I'd like to see it lower first. So yeah, big sell. It's still a good metal, don't get me wrong, but I think it might be, just chilling for a little bit there. Now, silver does have a nice daily close on it. The weekly close in particular will be important. Love to see a great 24 hours out of silver. So let's see if we can get back to that resistance of 34. Certainly watching it very closely this week, and we'll update you guys there. And oil is doing nothing. It just keeps sitting around this neckline of the inverse head and shoulders, which is here. So yeah, no updates on oil there. Treasuries, Tesla, 260. Obviously, the call resistance, we break, we go to 280 generally from a options perspective. So obviously, some Tesla traders will want to be looking for that. And yeah, I mean, are we going back up to the 290, 295 area? We certainly could be. Mags, this is a pretty big breakout, just like on the S&P 500, etc. We saw the daily 20 moving average, which has been pretty good at holding down the mags the whole time, break up above. They're actually not leading. So you can see here that on the 9th, they were higher during that massive thrust day. They have not come back in the same strength. So obviously there's still some concerns about the semiconductors, and what actually a chart that we should all be looking at in the future and continuing to pay a lot of attention to, especially if we're wanting to be more bullish, is going to be this one, the semiconductor versus SPY chart. So we obviously have just seen a series of lower highs and lower lows, and we need to be, realizing that yes, we did take this higher high out. Yes, it's kind of bullish, but levels like this as a ratio will be very important in the future. So of course, we'll be looking for that. If you have a look here at Intel, news of sacking people and of course earnings has pushed Intel to be a pretty good earner this week. So that's been pretty good. And Google, as we suspected, I had a feeling there'd be a lot of ad revenue, and there was a lot of ad revenue. So that was just more based on almost social arb, just what we were seeing here on the kind of media platform itself. I just noticed so many people were viewing. Obviously, all this turbulence in markets gets people searching as well. So they're doing a lot of research, education, all that kind of stuff. HSI, what's going on with China? Well, it's more stagnant, but obviously still on the upward curve. So there's no real news coming out. So I guess the thing is that waiting for deals, waiting for more information to get that going. Just remember with China, there's still a lot of stimulation. So there's a lot of liquidity being pumped into this market. We've got a chart that we'll share soon. You're going to be absolutely blown away by the amount of liquidity that China's putting into their markets. So that's going to still support it. And NASDAQ, of course, new high. Let's see if we can get to 19.6. So I'd like to see it go to 19.6 over the next coming sessions. A few of you pointed out, and you're correct, that the US 2K obviously had already made a new high over the last 24 hours, as in before we saw this breadth thrust. But as you guys know, yes, we had a broadening market, and we already knew that because we had that 96% breadth day. But at the same time, we didn't have tech. We just got tech the last 24 hours. So that was a pretty big sign. Next stop for something like US 2K, if it does keep rallying, 2000 would be the next key level. Let's have a look at Bitcoin. In general, Bitcoin has come back up to a resistance zone. So you can see here around the 94,000 is the first resistance. Anywhere in this red box, I could see selling from Bitcoin. It was an excellent run, but it was just so quick. We got that breakout, bang, bang, straight to the next level of equilibrium. So at the moment, people getting still excited about Bitcoin. It's still an upward trend. Even if it pulls back, I'd expect people to try to buy it now. It did change trend as well. So it's just another sign of things seemingly climbing the wall of worry. So of course, we'll have to continue to watch this and stay vigilant to both sides. You've got to keep your mind open to both sides here. Swag breadth thrust, hey, I'm not mocking it. That thing is an absolute beast. I've used it so many times. But could it be that this is the one time it won't work? All right, I hope you enjoyed today's video. I hope you were following along with that absolute saga of finding that swag and hopefully getting it to trigger, and it did. And of course, if you want to find out more, check us out on X. Check out our 7-day flash sale as well for our courses. And remember to subscribe and smash that like button. Guys, what a week it's been. What a 4-week period it's been. We knew we were forming structure. Now things seem to be getting clearer, but are they really? I think it's still going to be absolutely wild. So make sure to sub, and we'll go through it all on the weekend after we see Friday's close. Bye for now.